We don't do that here.
Hey, good morning, good morning. Let's see what we have here. Yeah, we're getting predominantly like bearish price action this morning. They got the daily down 0.30. We have, man, yesterday's volume also was insane. You know, we got a pretty big dump here during the London close. New York open and London close. So this is the type of directional bias that I have here. It seems like the daily is rejecting. Daily is rejecting some highs there, so we might not be seeing the all-time highs this week. I could also feel the vibe. Like yesterday, we did have a bomberclad trade, but I could feel the vibe. Like it was not as nice as the previous days because of the way we were kind of ranging over there. Pretty big range, but yeah, it looks like we're not going to be breaking above 3,500. So price is coming down again. We hit the highs 34.35, and now we're retracing back downwards. There's some really nice range. It's quite interesting to see London starting to push up here. I actually rather want to get a sell, but a price has some really nice range on the left hand side. Let's see. I take. Made 6% on that dump. Oh, you did? Nice. US and EU close in on 15% tariff deal. Okay. Let's see here. Price is still moving down, so I think for now I'm just gonna focus on the sells. Let me see here on the 30. See, hourly, pretty nice range on the hourly too. We got some room over there for price to move towards, like, you know, 33.66 ish. Let me see, 4 hour. 4 hour looks clean as well. Yeah, it's in a sticky situation, this one. I'm gonna wait and see. Can we get a break? Can we get a breaky? Possibly of these lows here. Stop loss, let's say about 24. How much is this? 24, 25? Is it like 26? Is it like 26? Let me wait for a pretty decent break here. We're forming a resistance over there as well. All right, so this could be the London Open fake out here too. Let's see how price comes towards my levels here. Well, it needs to respect that high and then come down. That's the thing. Yeah, I'm looking at this here. Like, if you look at this, we have a resistance on the 5-minute over here. So forming a resistance, you know, it's a London Open right now, so we don't know where the fake out's going to be, right? Like, we're just getting the first 5-minute candlestick close of the London Open, and you know, we have one potential fakey here. That could even mean that price could shoot up a bit more. And if it respects this general zone, it's a small little resistance. Get a fake out from above here and then re-break the lows so we can continue pushing downwards. We can continue pushing downwards here with this sort of like directional bias. So much volume here. Currently, we're down 0.30%. By the time we're getting entries, I think it should be like 0.35. So honestly, this will remain valid. You know, if candlestick starts to close above there, like, I'm gonna have to wait and see. Let me remove this for now. Hey, what's up, Brian? Good morning. Good morning, Vincent. What's up, Momar? It's good. Ellie, Architect. Good morning, all. Nice. Might give a little fakey here. Let's see. Stop loss 26, 27. We do about 28 since we created a small new higher high. All right, looks like I might be getting triggered in here. I want this candlestick to first close. All right, let's see if I can get my entry. It's about to trigger me in. All right, nice, I'm in. See if I can get gold to continue moving onwards, downwards. Oh yeah, let's freaking go, Goldie. And we got Freaky Friday tomorrow as well. Nice push so far. Want to break even here by 33.73. All right, I think it's safe enough. Stop loss to break even here. Wait, let me see if we actually hit what I want to see. How many pips is that? 13. It didn't fully hit my mark. All right, it's reflipping. Stop loss to break even now. I don't want to see this candlestick reflip. I don't want to see that 1 minute candlestick reflip and break its highs. All right, we just got the new 5 minute here. New 5 minute candlestick just opened up too. Creating a top wick on the 5. Hopefully you can survive this 5-minute top wick. Alright, I'm out of BE. Didn't get the volume I wanted. Out of BE. GG. Wanted to see this thing completely ripped down. It's because we got like a support here. Got a support here. Could range, could be a little bit choppy. So that's why I wanted to see a cleaner follow through. See, that's 3:07 a.m. What are we down currently right now? 0.35%. Yeah, I was wanting this to be the London Open fake out. So you see London just opened over here. We had multiple resistance points. And candlestick closed above, closed down below. And we're expecting this to continue the bearish momentum towards the downside. But looks like London might be a bit choppy. It might even do a double fakie over here. Because that's a lot of volume to come in on this candlestick. Not really liking the looks of it. So it could be like a V shape here and then a V shape here. You took 10% partials at 10 pips for the commission. So at least, alright, nice. Yeah, I think it peaked here only about what is it? 13.6. But anyway. I don't think there's much room for it to move up. You got multiple resistance levels over there. What's up, trading? Forming a nice accumulation. Right over here. Might give it one last shot. Maybe if it re-breaks these lows. Yeah, I think if it re-breaks these lows, we should get the move down. We should then get the continuation. Let me just see how price comes towards that level. Cable seems to find a level TP. Let's see, news. What do we have today? Oh, we do have some red folders. We got unemployment claims later on. For right now, we have Euro news. That's all. Like, we got pound news later on. Flash manufacturing. But I think the key thing is that 8:30 at 8:30 time. It's starting to break the highs of the consolidation now. Yeah, it looks like London opened up quite choppy here. Break highs, V shape, breaking the highs again. Let's see how it reacts. Oh man. It's coming back into it. This has now become like a no trade zone. Pre-London has been better than London session. Yeah, I think the London session, you just have to be a bit cautious about the choppiness. Sometimes it's a bit choppy. But I think yesterday's London was actually pretty nice. There were so many nice moves that played out here. Price was a little bit more spread out, was flowing a little bit better. Yeah, yesterday's London session was pretty nice. Damn, so many opportunities. I think this is where we took our buy yesterday. As price was breaking those highs, took our buy. Then I secured around here, I think, somewhere around here. Before price started reversing again. So what Goldie's doing? He's trying to come back down? What are we doing here, Goldie? Maybe it's the hourly top wick. So like a sell below the hourly flip. If the hourly candlestick can reflip and break its lows, you could get a wick fill and a continuation to the downside. Really try to catch the shorts here because I do feel like there's quite some potential for price to move down today. Let's see, maybe I can get a tighter stop loss. Because could this be the hourly top wick? Could have been creating the hourly top wick over there. Which on the 1 minute now would look like a... If it really does want to come down, this would be the hourly highs to create hourly lows. Your hourly highs and then start to create hourly lows. Hourly highs, hourly lows. But like a lot of people want to catch the buys, but so far gold is not telling us it wants to buy. You know, you gotta trade what you see as well sometimes. You know, if you see a lot of bearish momentum, then this could be a pullback over here as we're heading towards the end of the week. I kind of know these types of setups over here. Usually, like, we get such moves like this sometimes during the pre-London time. where you see like Asia had already made a move down, and just like I'm trying to assume this is a pre-London time, so it's still early. It's still early in the day, basically 0.30% right now, with some sort of directional bias. Yeah, with some sort of directional bias. See, because look at this. Man, if gold moves, chat, like if we continue to move, we're coming out from this zone. This is going to be the point A right over here. This is a zone, because look at where we currently are sitting at right now. We don't really have any movement. Like the price is kind of consolidating, correct? So the next dump is going to come from this zone. There's going to be a move. I want to see maybe if I can tighten my stops there. See if that zone can get respected. It's going to play the range. It might even play this range here for a bit. So it's quite important to wait. Sit on your hands. Alright, guys. You're already here in a cell? I'd say right now, at least there's a higher probability price moves down than it moves up. For price to move up, we have to break above. We need to start creating at least some structure. Ideally some new higher highs to be formed like this. Then we can see like price is starting to create some sort of a support there. Might get a tighter entry. If this candlestick here closes bullish, could create a potential continuation from this end. Got about 35 seconds here for candlestick to close. Looks like we are gonna close bullish. Alright, breaks of these lows, I'm gonna be in. Oh wait, let me see, let me see. First of all, does that look good? Yeah, I think that looks pretty decent. Or we can wait. Actually, I think the structure would be a little bit better. Yeah, I think the structure could look a little bit better. I'm going to take a safer option here. I'm going to take a safer option and wait for these previous lows down here. The ones I initially wanted. I mean, that is an option there, but it's not the cleanest. Could get stuck in a range. Yeah, could get stuck in a range there. Yeah, I guess what I want to see is a commitment, you know. I want to see a commitment from price that it wants to keep pushing. I'll see how my stop loss can get tighter and tighter here as price comes down. Tighten up. Bruno, thank you for the sub. Big so aggressive today? Yeah, you gotta be a bit aggressive here on the 1 minute. It's like, you know, on the 1 minute, it's the environment changes so quickly. So it's always like, gotta do analysis here. But I do want to catch these sells. I feel like the first move was just a normal London consolidation. It was probably just consolidating a bit more. I think if I tightened my stop loss a bit, then I could have like secured what I wanted. But you know, if we're talking about this general price action, we definitely are not moving. It's stuck. Look at this accumulation here. That's why I think like the smarter play is like wait for the actual break, which is going to be that hourly reflip and break of its lows. If price is to continue to move down bearish, it should be right here. So we're going to get higher time frame volume come in. Let's see, we got some time here for the 4 hour to close. Then looking for like a wick fill on the previous hourly. Yeah, but it's giving vibes like, you know, it could even retrace, but you know, you gotta wait, you gotta be patient. Looks like nothing. Hey, what's up, Kwashi? Nice to see you in the chat. Yeah, look at the massive moves from a New York session yesterday. Huge dump slater. Nice little breakout here as well. Little break, retest. Continue to move downwards. Okay, nice, nice, nice. It's starting to shape up here in the middle a bit more. There's an early entry that could be forming there. See how big my stop would be. Maybe up 28.9, but I still want to see this candle here close. All right, so I think a break of those lows should be good. Yeah, break of these lows should be good. See if it can respect these highs. Want to use that high there as my stop loss. Oh, all right. So it's not respecting those highs. Goddamn, Goldie. It's really breaking the high of that consolidation. Kind of still wants to, looks like it still wants to push up. Or it's just like, yeah, we just got to adjust this area here. Got some resistance up by that zone. That could be the fake out confluence right here. If it does rip down and break the lows. Yeah, that's the thing about the 1 minute. Any candle can just shift the whole thing, you know. If this candlestick was to continue moving upwards, then obviously then, you know, then it looks more good for buys. But if it starts pulling back downwards aggressively like that, then that could be a fakie. We don't know until we get the entries. So I'm looking at that as a potential fake out right here. This accumulation. I'm waiting for the break of the lows. So, you know, price can continue moving down. But I want to see price just start lipping. I want to see price start ripping down though. Let's see, no top wick on 5 and touching SMA. Let's see what? No top wick on 5. Oh, we got the new 5 open. All right, so it could have been because the 5-minute candlestick opened. See, we're creating some resistance up there though on the 5. Yeah, perfect, perfect. If this candlestick starts to pull down, that'll look really nice. This will look really nice here. I'm gonna see if that high gets respected. This is like a god card lobby here. I'm already in with a small sell. Risk it for the biscuit. Godspeed, Cizo. Tiny liquidity grab that just happened there. Really want to see this thing come down here. When's the next 5-minute candle here opening? All right, cool. So we got a new 5-minute candlestick about to open. It's better we leave this candlestick behind here on the 5-minute and then get the next 5-minute. Preferably create a top wick. All right, new 5 minutes opening up. Let's create the top wick. Now it's gonna be a reflip of the 5 here. Now I want to see a reflip of the 5. But it's whiplashing so much. You can see from this zone, whiplash here once, whiplash here. That's coming back into the range. It's still deciding what direction it wants to go. Hey, good morning, Sadala. No top wick on 5, or I think it needs to break the zone. You know, the thing is, if I can get an earlier entry, I'll get the earlier entry, because sometimes waiting a bit longer here is even more risky. Because if the distribution comes in now, then I want to be it already got stuck in. As long as I see some kind of potential here for a breakout. Yeah, that would be the safer option. Get that hourly. Is it the hourly still open? It would be the hourly reflip. Reflip and break of, I mean, it will be the hourly break of the lows. My entries are going to be like, or what I'm anticipating is just going to be the hourly turning bearish. Turning bearish here, giving like a small wick fill of the previous hourly candlestick. Because I really do anticipate there's going to be a big move happening soon, and it's coming out of this zone. Question is like, when is it happening, you know? When is it going to break? Is it going to break now? Can we break now? What's that? You're in a long, adding long 75.4. Sell stop? No, I'm not saying sell stop, because, you know, sell stop sometimes you can get triggered in like this before getting what you want to see. I do want to see this bearish continuation. Let me Gbpjpy shoots up first. Wait it out. 50-50. Right now it's in a 50-50 zone. Just waiting on key wick breaks. Dun, 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 dun. Accumulating a bunch of orders here. New hourly's opening in the next 15 minutes. You know, the thing is with gold, it has a big resistance. It only has one potential fake out here. So if it wants to move up, it should just move up, because it's already had its V-shaped fake out right over here. Reverse head and shoulders pattern. So usually that, in a scenario like this, you'd expect price to keep moving up. So if it re-breaks these lows, then I think, you know, price has a good chance of respecting this area and moving down with the overall bearish momentum. And then we can get the break out of the zone. It really needs to put some work in here to break that high. I think that Owly just reflipped. Or am I gonna get triggered? Can this be the break? All right, Goldie. Let's go. We got the new 5-minute candlestick about to open in some time. So it might pull back a little bit more as, you know, waiting for the new 5-minute open. But I'm quite happy about the overall direction of this. You know, I think if there's going to be a direction price heads to right now, it's probably most likely going to be heading down a bearish. So gold has not shown me a reason as to why yet we should be moving upwards. You gotta see like where the volume is heading. You know, volume is heading downwards right now. Let's go, baby. Let's go. All right, guys. Stop loss to break even. Stop loss to break even. Risk-free trade. It's a risk-free trade here. Let's go. Let's go. All right, chat. Securing my profit right over here, guys. Caught the break. Awesome. Awesome move. Oh, let's run. Holy. That's what I was waiting for. Really nice. Really nice. Yeah, I definitely need to secure something, guys. You know, right now, secure, if you still want to hold a runner, secure 80%. Don't worry about where I'm securing. I'm up 40% for the month. Maybe you're not up 40% for the month. Just secure something, you know. Holy. Goldie is bleeding. Beautiful. Caught the sell that we wanted here. July has been nice. Yeah, July has been my best month. It's been my best month in quite a long time. It's because, you know, in July I decided I'm going to take a lot of trades in when I started the month here. I took a lot of trades, so that's why I'm up so much. I've done like about this month I've done around a damn, that's crazy. About like 42 trades already this month. So I just been really active. But I gotta admit, I did burn out here a little bit towards the end. I only had energy for one trade, so I've just been doing one trade a day for a since, or like let's say, yeah, like this kind of like 1 or 2 trades, but less than when I first initially started the month. It looks like the second distribution is playing out too. It's playing out pretty nicely there. Also, the second distribution would have played out. How I went to just get something and full TP hit. That's the way of the market. It's like it knows when you need to do something. Yeah, that's what I just want to catch here. That's all that I wanted to catch here. Oh, nice. But you still, oh, you got the trade? Nice, awesome. You still took it. Yeah, that's the thing with these London, that's the thing with these London times. Because, you know, like if we don't get the full follow through, it's good here today we're getting like some follow through. But if you're not getting the full follow through, then you'd want to be like mostly like trying to look for scalp, kind of like these scalp moves. Hey, what's up, Joshua? What's good? What's good? And you know the beautiful thing is that hourly reflip. Now we get the hourly wick fill of the previous hour, and then price can, you know, continue moving down there. You see, for a buy, it's kind of risky. You got everything. You got 4-hour bearish. You got hourly here bearish, like all time frames. Daily is down right now 0.50%, which I meant like, you know, I'm kind of like treating this as a pre-London move. You know, because a pre-London move, we're usually like hovering around. Sometimes we're hovering kind of early. So we haven't yet had too much of a significant move yet. You know, Asia session and hasn't really moved that much. So if there was going to be a move today, then yeah, I think it made sense. It made a lot of sense here. It made a lot of sense here. Now price is down 58 pips. Y'all think I'm playing? I'm not playing. These trades have been running so much of late. Like that's what happens when you have volume in the market. You're gonna get so many of these trades just run. That's why yesterday I said, okay, you know what? I've been missing so many of my runners because I know it runs, but you know, it's like every now and then if you see that's so much volume, you might as well just hold a trade. Because, you know, a lot of people struggle with holding trades, right? And I think this is a perfect example of how to be holding trades. Is like when you realize there's a lot of volume in the market, then you can, like, you know, hold a position. So yesterday I held my position here, made about 6%. You know, I don't always do it, but if you see it, if you see this volume, look at this. Price is down here, 75 pips. 75 pips. Yeah, I think it's pretty good. Yearly is bullish though, so I'm looking for 1-minute buys. Man, I think if you're looking at the yearly time frame and you're looking for 1-minute buys, I don't think that makes any sense. How does that make any sense? because you want to have your time frames be close to each other. You know, so like if you're looking at the yearly time frame, you got to look at like maybe like the daily, you know. Maybe you're going to take trades off the daily. So you're waiting for these little accumulations here. So you're going to be sitting on your trades for a while. So you say, okay, you know, like yearly is bullish right now. Price is moving up. Let's see, we're getting like some kind of accumulation over here. Obviously, I'm not looking for sells because the yearly is bullish. So I'm going to use this as a fake out confluence, re-break of the highs, and have my stop loss within the range. And then now you're trading with the yearly volume. And trade it with the yearly volume. Or the monthly, you know, maybe the monthly. But you know, yeah, but it's true, like trading the yearly also just in its own right doesn't make so much sense, because you know, like it's such, you can have that quarterly perspective, like okay, so this quarter we're most likely going to be moving up for the year, and then start looking and breaking it down from, let's say, the quarterly time frame. Where's the quarterly sitting, the monthly, working your way down to entries maybe on the daily, and then securing as price moves up for the year. So you know, you're probably just gonna have like a different strategy then, and not the 1 minute, because you know, this has nothing to do with higher time frame right now. That price is moving down. Take profit after 3 years. Hey, if you got a big enough account, you can trade the higher time frame. Take like, you know, maybe 10 trades in a year. Now we're coming down towards the 8 SMA here on the daily. Just tapping into daily 8 SMA. 8 SMA. Massive rejection here on the weekly of resistance. So it looks like Goldie might not yet be ready to move up. Yeah, it looks like it might not be ready yet for the all-time highs. I'm waiting for ATH to enter sells. You're waiting for all-time highs to enter sells. Oh, that's risky. That's risky, because if we start going, I think that's what you mean. If we start going towards a 3500, this is going to be a whole lot of exuberance. And I think at that point, there's going to be some fundamentals which have come out, which is even making us continue to move up. Let's see. Gold holds drop on trade optimism. The European Union is moving toward a trade agreement with Washington that would impose a broad 15% tariff on EU goods. However, some caution remained amid ongoing threats of 15% to 50% tariffs on countries such as South Korea and India, which are still negotiating deals. All right, so we're just waiting here. Traders also await clarity on talks with China, with Treasury Secretary Basement scheduled to meet Chinese officials in the week ahead. On the monetary policy front, markets are focused on next week's Federal Reserve meeting, where rates are expected to be kept on hold with potential cuts anticipated in October. So yeah, that's it. Gold edges higher on possible position adjustments. Speculative positioning in the precious metal appears to be elevated through not extreme, while retail demand seems to be slower. Yeah, retail demand of gold. Gold could remain in a consolidation phase until a clearer dovish signal from Fed emerges. Oh, yeah. I mean, like, I think the main thing we're waiting for, I hope, the thing is, like, gold is waiting for rate cuts. That's what I think it's doing. And we're just having these times where we have a few volume pushes based off tariffs and some beef between Trump and Powell. But it looks like gold is predominantly waiting for rate cuts. So it's true, like, we could possibly hold. We could really possibly hold this level. We'll see how it is on August 1st when the first tariffs come about. See how that moves markets. But yeah, gold is just holding here. Was that so close to 100%? I could hold it a bit more, need like $20. Oh, for the month. Nice. Only $20. Look at this, so close. 99.42%. Yeah, sometimes it gets very hard to even get just whatever is left of what you need to capitalize off. Can be so hard to get sometimes. Like, you think about like a funding challenge. Let's say if you close a trade a bit early and you just need a little bit more, because you're gonna think about it so much that it's like pushing the goal away. And you start taking these trades and it just puts you back and back and back. Man, but yeah, that's the distribution here. This is basically the sellers are getting paid off here now. So there's no re-entry. This is distribution. So you see, since London hadn't done anything yet, it had to pick a direction. This was 50-50 until price actually started breaking key levels. Maybe like break above the highs here for a probability that price maybe starts to retrace upwards or starts to break the lows so we can distribute towards the downside. And GJ needs to what it wants to do. Yes. Yeah, GJ's ranges were nice. I think Prime Minister was talking yesterday and price moved downwards here. It filled this range on the left-hand side beautifully. Down towards like, 198. 198. Beautiful little head and shoulders pattern here too. Left shoulder, head, right shoulder. Boom. Break of the lows. Distributed. Corrected that move. Came back upwards. And it's just ranging actually if you think about it. These zones are still being respected somewhat. Broke above it. Then again broke but down below it. This is another head and shoulders pattern here too. So you can see left shoulder, head, right shoulder. Volume came in. And same thing here. Left shoulder, head, right shoulder. And then volume came in. I think the right shoulder is actually even possibly... no, I think that one looks better from up there. But even to see GJ move like this, we don't even see GJ move this nice. It's moving really nice right now. Really freaking good. And a little accumulation over here. Broke down, sideways channel. Starting to break above. It's probably heading towards like 198, 800. Oh man, this is like the GJ that we all love and know. It's starting to go back to its normal PA. Holy! When was the last time we saw GJ look this good? Sheesh. It's been a while. See, price dumped here about like 82 pips. Nice. Yeah, it's been a while. They're going to correct this range. Broke above this little minor resistance here. Little accumulation. It's currently in a distribution phase here on the 5 minute. Gold forming head and shoulders on the 4 hour. 4 hour head and shoulders. Yeah, you see, I always gotta... It's kind of hard because you might be looking at it from... I think you might be looking from here, here, and here. Or even like from here, here, and here. But I don't see anything really obvious standing out. You know, sometimes you don't want to force it. You don't want to force these patterns because the market's going to show you those patterns if you force it, you know? So it's nice to just like have it just come to you rather than you always looking for it. Yeah, it looks like a bearish day though. So far we're down 0.50%. Well, Vic, I remember you used to trade GJ. Yes. Man, the last time that I traded GJ here was all the way back in April. Last trade on GJ was April 17th. Consolidation breakout, 1 minute, W trade, 2%. Oh, nice. At least it was a winning trade. At least it was a winning trade, so... Yeah, GJ, man. GJ used to be so good. Sometimes I would only even get GJ. You know, like gold would not be performing well and we'll just trade GJ. Look at this. This is like, we've taken here 7 back-to-back GJ trades. You got a shotgun, nice little volume for the shotgun entries, consolidation, shotgun, consolidation, shotgun. Man, this was pretty nice. This was in January here. But yeah, now, man, now this has become like a gold spot stream. All this is just gold. Gold spot expert. Let's see futures. Gold futures should have done the same thing. Basically, it is basically the same thing on gold futures. So if you trade futures or gold spot, basically the same thing here. That was a sell. Actually, you would have had on gold futures 0 drawdown. Damn, that was a clean push here. 0 drawdown. What's the view on gold? I'm thinking bearish, you know, like bearish for now. I think with the London session, you have to respect direction with a London session of late. So if it's moving down, because it won't give you a follow through, you know, it doesn't have enough of that volume. We tend to like to see where it can give you counter trend follow throughs. So if it's not doing that, then you have to trade with the direction for London. With the New York session, it's a bit like, you know, maybe you can get away with some things. The pre-New York session, pre-London sometimes. Never liked GJ. I think after all trades, if I'm luckily, I'm BE or small profit. Let's see like this move here, for example. Let's go on GJ. Just want to see, because the stops are pretty tight. See, break below support. How big a stop is this? That's about like, you know, like 10 pips. Pretty nice 10 pip move. You got a 41 pip range, 1 to 4 risk to reward. This was clean. But you gotta see like, man, at least GJ when it moves, it's like when it's clean, it's clean. You got at least a tight stop loss. That's what I like about GJ. At least you can get the tight stops. I'm never worried about GJ and having tight stops. And then little shotgun play towards the downside there. And like one right here. Oh, like what? Swing entry. Swing entry model. Then price came back, closed below support. But you got some support levels here on the left-hand side. So it's not as clean as this was. Like, you know, looking on the left-hand side, this was so much cleaner than what is it over here. It's kind of like choppy. Trend is your friend on London at the moment? Yes. Break and retest on the 30-minute possibly, but the 4-hour has tapped a key level. Was that break and retest on the 30-minute? I don't think so. I don't think so. Break and retest. I think like for break and a retest, maybe you can see. You can see. I think, you know, like when you're looking at break and retest, something like this looks cleaner. You know, because you have so much potential. You know, like price broke from this zone. You even got like a left shoulder, head, right shoulder. Price broke, cleaned up the range here. But there's still so much room for price to move down. So, you know, break and retest here, you can say, okay, you know, even though we've tapped the support level, if we're getting a retracement back in here, I can still catch the next zone. You know, maybe this is just breaking a retest to remove these previous sellers so it can continue pushing downwards. I would say that would look a lot more nicer, you know. And also it's at the beginning. It's like literally at this point, A level over here with so much room to continue moving down. But down here feels like kind of like, you know, you don't have that much structure to go off. So it's not as clean of a setup. That's why it's like the more structure you have sometimes, the better your trade. Because you can see like where price has paused. Where it's paused. And then you can catch the continuation. Because a lot of the time people see the move happen like this. And then they're going to chase the move. Especially after it's already played out. If it's already like, you know, had a significant move. Otherwise, you know, sometimes I can also do that. Like I can see my trade, let's say already break like this. And then I didn't get in. But the move, the take profits have not yet been hit. And if it comes back up, I could consider getting in. And then for a continuation. Because sometimes, you know, price does push. And then it stops. Then it's like, all right, let's come back here. And then have the continuation. But it's still within that general zone. Oh, we're just approaching. I think that's a 50 SMA there on the 4-hour time frame. Which one is the most important news today? Today, most important news is today we have unemployment claims. That's going to be, I think, the most important news. If you're going to be trading, let's say gold, you have gold. So if you're trading during the New York time, that's 30 minutes into NY, then we got unemployment claims. If you're trading GJ, then you have flash manufacturing here in about I think that's 15 minutes. In 15 minutes, you should be getting some pound news come out. But yeah, I think what people are mainly looking for is these unemployment claims. Right over here. We also got flash manufacturing at 9:45. Alright, so New York session is going to have quite a few red folders here. You have on the open and on the next hourly candle. Oh, towards the tail end of the next hourly candle, you're going to have another folder. Okay, good to know. Yeah, during that time I'm not going to be on the charts, so I think, you know, those are going to be some fireworks for people trading the New York session. We don't have fireworks here, man. That's what I love about London. But you know, the thing about London, you just got to wake up for the London. You got to wake up early for the London. You got to wake up early for the pre-London. But the good thing is there's no fireworks. You know, those are really good times to be trading. Actually, let me see. Could I have caught a move today pre-London? Boom, boom, boom. Little accumulation breakout. Yeah, we could have caught the sell. I think we could have taken a sell over here. I was in Snoozeville when this was happening. Yeah, I think all I wanted to do was prove to myself that I can actually push some limits here. So, you know, all is pushing limits. This is 1 to 2% per trade. 1 to 2% per trade, up 41%. That's the first time that I've ever done that with 1 to 2% and just scalping, you know, just normal scalping. This is not even achieved by necessarily low risk, high reward. Because, you know, for me, even like almost a 1-to-1 can sometimes be like, you know, 2%. You know, maybe like 9-10 pips can be like 1% when I'm really on scalper mode. So it's all about percentages at the end, you know, it's all about the risk. So you can get that result with risk to reward, and you can get it with just focusing on percentage gains. You know, that's what I like to do. I don't like to put people in a box and tell them that they can't do it with risk to reward. You can do whatever you want. You know, you can do risk to reward. You can do whatever works for you. But yeah, I think, you know, price is coming up here. Starting to have a small little retracement. See, did we get an accumulation break? Maybe like a tiny little accumulation break here. But it still respected the lows. So it's like a really small one right over here. And break, came back, respected the lows. Now getting the continuation. Little retracement. See here on the 1 hour. Got the new hourly candlestick that just opened up too. Yeah, I think that's good. Beautiful range. Unfortunately, no entry confirmation for potential buy up here. Like on the 5 minute. Just on the 1 minute, potential accumulation breakout. Let's go on a Discord. Let's see if you guys took some trades here today. First trade of the day, didn't hold it again. Why do you do this to yourself? It's like torture. You know, you take these really nice trades and you always say, man, I wish I could have held that trade. RSI, let's see, total movement up 53.6 pips, never holding. Yeah, never holding. You need a whip. You need a whip, sir. Why don't you hold? You just gotta pick one. You just gotta pick a trade and then just hold the trade. You know, all the hard work is done when you are executing. Now, you know, the easy part is just the holding. It should be the easy part. Technically speaking, you're already in the trade. All you gotta do is hold. Psychologically speaking, the most difficult thing to do is to hold. Oh, nice. Got a sell over here. That's exactly the way my trade looks. I think you even got a better entry than me. Do you scale out of your position? Oh, you scaled out? Shouldn't this have been the runner over here? Because you had like 2 positions. You could have left this one over here to run. You know, pretty good. Pretty good. Like, you never go broke securing a profit. Profit is profit. Cut too early? Yeah, you know, sometimes it happens. Sometimes I feel like I cut too early as well, but I always just remind myself that it's not, trading is not a trade. It doesn't have to do anything with the single trade that you're taking. It has more to do with the cluster of trades that you're taking than the single trade. You know, single trade doesn't mean anything. You can hold the single trade, you can cut too early, doesn't mean anything. If you're taking like 25 trades in a month and you're still having, you know, good trades, then you're still going to be coming out profitable. At least you're securing something. Because, you know, some months you hold the trade longer and you have profitable days come losing days. And then, you know, every once in a while you can give yourself like a small boost. Like, you know, you can give your account like a small boost. Like by holding. At least pick a time where you see volume in the market and then just hold the trade. You know, that's why I did yesterday. Because I saw the previous 2 days, instead of securing 2%, price was still moving up with this fresh macro fundamentals that we were having, that I could have at least given my account like a small little boost. So you want it like this, gradual steady gains and then occasional boosts. So you're not always trying to hit a home run. Yeah, it's broken out. It's so funny actually, you know, like how price moves. Because in a 90% consolidation, 10% paying out. Now it's going back to consolidation here. Again, 90% of it is waiting. 90% of it is waiting. And then you have like one of these genuine moves. I call this more of like the genuine moves. Because you can still have profitable trades within the ranges. But this is like, when we look at it for what it is, this has been the actual genuine push over here. So this is where you want to find yourself most of the time. You know, on a higher time frame perspective, like a general perspective, and also a lower time frame perspective. Because you can still get those small pushes like that. And then back into the range, you know, you can still get profitable trades like this too. Because there are markets are fractal, correct? So it happening there, like this, it's just for that time frame. It's the same thing as for it to happen over here as well. Correct? Hey guys, I'm feeling sick today. No trade for me. I'm gonna have some rest. See you guys. Thanks, Vic. All right, trading. Hope you get better soon. Kalisto is so aggressive. Don't know what that means. Which one is the most important? News, break, and retest? What does that mean? So aggressive. Because, you know, would you consider this aggressive? If you think about it, this is only my second trade of the day. You know, this is only my second trade. First trade was a BE, second trade, give my trade a second chance over here, and it's like more of a second chance than a aggressive re-entry. I think aggressive trading is only aggressive when you're like over trading or over risking. That's what I think for me means aggressive trading. So if you're taking a third trade and you're forcing issues because maybe your first two trades haven't worked out, yeah, that is aggressive. Let's say if this trade was also a break even and then I still wanted to go back in again. Yeah, I think at that point, then it's aggressive. But you know, sometimes the first trades, they don't always play out. So, you know, you got to give yourself a second chance. Yeah, on your 20th or so today. All right, so we got like a range here on GJ. But like, you know, 16 pips below 198, 430. It's my first time trading and I see it's not that easy. Yeah, trading is the hardest way to make easy money. Because, you know, in hindsight, man, everybody is a pro. Everybody can tell you like, oh, you know, why'd you take a sell here? So basically, if I was to lose this trade, someone can say, oh, obviously you lost this trade. It was in a range. You know, in hindsight, everybody's a pro. Even when you do your backtesting, you know, you have this situations where you create a bias for yourself that maybe you don't even know you're doing it, but when you do your backtesting, you kind of already have a low-key idea of where price is gonna go. So this used to happen to me a lot because I would do backtesting for the week, right? I would already kind of have an idea of where price would be going for the week. Correct? And then you kind of like, it looks good in hindsight, but when you do it in real time, it's like so difficult. So you want to remove so much bias, as much bias as you possibly can. But backtesting is a really good way to do that. You know, that's why we do it on our on MT4 simulator. We come over here. First thing we got to do is you got to pick a random date. So you go on 1. You pick from maybe the 1st of January up towards like, you know, 28th. And you pick a few months over here, maybe up until like June. And then you're going to start on like a Monday and then get the random date. And then you're going to start backtesting from this date. You know, and try remove as much bias as possible when you're refining your strategy to see if it can be profitable. But definitely it is requiring a lot of consistency, but it does get easier with time when you accept losing trades. You know, if you can't accept losing a trade, then it never gets easy. then you're always going to worry about the worst case scenario, you know? But if you've accepted losing the trade, if you've managed your risk, then you know, whatever. You lose a trade, then, you know, move on to the next trade. It's only like maybe 1%. Maybe you can even manage your risk better. But the problem is people focus too much on these single trades. Like it happens so often, people are going to risk like, you know, 15, 20% on one trade. And then that makes you emotionally invested in the position. So you don't even want to see it lose. I think, you know, that's the thing. Just focus on risk. Focus on risk, and then it should get easier. Because the hardest is to deal with that emotion of losing. That's why I feel like that's what traders have a harder time. It's not even to do with the skill. It's to do with their own selfish needs to win all the time. That's why they're having a hard time. Because you know what happens? You don't win all the time. You know, the superhero in a movie doesn't win all the time. He struggles for like 80% of the movie. It's only towards the end that the superhero actually starts to, you know, have maybe an easier time. But, you know, in the beginning, it's a lot of struggle. I mean, look at Spider-Man, you know. Spider-Man struggled a lot. And he still struggled even when he was a superhero. So life is exactly the same way. You know, most of it is struggle, and just a small bit of it is winning. You know, there's a tiny bit of it is winning. But that little bit it feels so much better than all the struggle. So, you know, you gotta control your emotions. Bro, I get emotionally invested with 0.2% risk. I think then that's like lifting weights. So you gotta, like, you know, slowly do progressive overload. You know, 0.2%. And then, you know, start really building that muscle. You know, it's like a muscle that you have to build as well. That risk appetite, it's a muscle you build by increasing your risk. And at the same time, as your skill level is increasing, your risk is increasing. Skill level increases, risk increases. But it's not the opposite. You know, for some people, it's the opposite. So their skill level is still down here, but their risk is increasing. So it's going the opposite direction. You know, instead, it should be going up like this. You should be on the same level. I think a common theme is, and this happened to me as well, is when you lose a lot, what happens is you increase your risk. You increase your risk because you're losing so much that you just want to try and break yourself out of it somehow, you know? But that is a recipe for disaster. So it's a psychological thing with a lot of traders. They're going to study trading and, you know, they're going to try and maintain. But then after a while, it gets boring, right? You're like, oh man, 0.5%, 1 to 2 trades. You know, sometimes you're going to risk like maybe a little bit more just so you can get that excitement. But usually what happens is the market's going to humble you back into the consolidation. So you're going to take a losing trade and then you're going to be like, okay, so I'm back in here. We're back in the trenches. So you're going to see that's what's going to keep happening. You're going to try and overextend yourself. The market's going to tell you you're not ready yet. It's going to put you back in here. So you got to focus in there until you can gradually get yourself out of that, you know, by progressive overload. But your 0.2% risk is equivalent to my 0.5%. Like 0.5% was my barrier that even getting above this for me at some point was kind of difficult because of emotional damage. You know, when I first started trading, I was losing like, you know, 2% a day, sometimes maybe even 5%. So I was emotionally damaged that when I reduced my risk, I found it very hard to get above 0.5. You know, and then you slowly start to build that confidence back in. Every day, you know, you take your trade setups, you get a bit more refined, then you get back to like, you know, 1%. And if you see again that you're performing poorly, then that means you have to go back down to 0.5%. You know, focus on the skill again, start the journey. Don't be afraid to go back to the drawing board. Never be afraid to go back to the drawing board. You know, you see some progress again, you go back to 1%. So that's how you're going to balance your emotions. But if you just stay here at the 1%, let's say, and this is too much emotion for you, then you wouldn't allow yourself the capacity to think clearly. So you gotta take some off. You gotta take some weight off. You know, we all want to get big, right? We all want to get big. Even when we start to gym, we overextend ourselves. We're like, oh man, I want to get big. So you get the big weights, and the big weights, they're going to lead you to injury, correct? Because you haven't earned that big weight. You know, you have to earn it. So what happens? You can get injuries, and you know, you put yourself out of the game for much longer. And you know, that's time. Man, that's a lot of time. The one thing I try and avoid in the gym is to injure myself. Like, I don't do reps until failure. I do like maybe one before failure. I listen to my body that says, okay, you know, this is the last one we're doing here. Beyond this, you're going to injure your shoulder, and then you're going to be out of the game for possibly a week. You're going to miss gains for a week. You know, I can't afford that. So, you know, it's the same thing as in trading. Like, if you're putting too much on your bar, then maybe in the beginning it's going to be okay. You can get your reps in, but wait till you get to the second set. You know, wait till things start to become difficult for you and you don't have a spotter. You know, a spotter is like a mentor, yeah? You don't have somebody to tell you like, hey, or help you to get out of that position that you don't do any more damage to yourself. You know, trading and life, you know, they go quite hand in hand together. So you gotta reduce the weight. You gotta reduce the weight and then focus on your formation and your technical psychology. Back to the basics, you know, it's all lies down in the basics. I think success comes from the basics. When you build a house, you know, you're building from the basics. And then all the fancy stuff, that's going to come later on. Steroid users as signal group takers. Yeah, that's true. Yeah, so it looks like we're having this small little retracement here now. See, create a new lower low. Kind of like in the golden zone for price to move down. Yeah, it says retracing. It's like retracing, maybe even potentially paying some setups from this areas here. There's a potential move, but I think that's more of a retracement. So it takes time, you know, it takes time for the market to set things up. Maybe the next move is gonna come. You could always start kind of like force trades, but if we're just looking at overall volume, I think that could have been the London session push, and price maybe starts to set up again for pre-New York. That's going to be at 5. That's going to be at 6 a.m. Eastern. So in like 1 hour, 30 minutes. We should be getting 6 a.m. volume to come in. Yeah, 6 a.m. volume. That's a candle that I like. But I think for most of my trades here, because I end stream at 6, I take a break, I go and eat something, and then I come back on the charts. Like you see my previous trades here like happening at 7. My trades happening here like 7:38, 7:10, 7:22. You know, take a little break there, and then that's a time of volume usually. From that 6 a.m. upwards towards the New York session open. Buyers and sellers making? Yes. Buyers and sellers making money all the time. You see, you could have made a sell move here and made some profit, or you could take a buy here and make some profit. So, you know, trading is not about being right. Trading is not a competition of who is getting the better trades or the most money. Oh, I just got a follow on Twitch. I don't even go on Twitch anymore. The thing I like about Twitch is it's like the quality on Twitch is really nice compared to YouTube, because YouTube compresses a lot of the video quality and the audio quality. But I got a pretty nice Twitch over here. I use it for some time. I think we're gonna go on Twitch when GTA comes out. Or no, we're gonna do it on Discord. Yeah, we're gonna live stream on Discord. Countdown to FX Vic Mensa's upcoming Twitch stream, 23 minutes. Can I ask where you're streaming from and when do you sleep if you're streaming through the night? I'm sleeping on... I live in Wakanda and we don't really sleep over here. We just stay awake, you know, all the time. Maybe like 30 minutes sleep, 1 hour sleep, then back to work. Sleep is for the weak. Only the weak needs sleep. I'm just kidding. Yeah, I know, like, at some point, you gotta choose whether you want to make money or you want to sleep. It doesn't matter where in the world that you live. That London and pre-London time is fucking early. It's gonna be early for all of us. So, you know, you gotta wake up. First thing out of bed, you know, you gotta wake up, look at the charts. Hopefully you don't take an L first thing in the morning. Man, sometimes I'm even happy to take the L though. Like, to be honest with you, I take my trade and it's an L, then I can go back to sleep. At least I know that I woke up. You know, I did 90% of it, which was showing up. At least I showed up. I showed up, I took my trade, you know, maybe I'm going to learn something from it, then I can go back to bed. The worst thing is also not taking the L. You know, when you don't take an L, you don't learn from the problem. Or you don't have an opportunity to learn and get better when you don't take an L. But when you take an L, you're making progress. You know, we say slow motion is better than no motion. You can sleep when you're dead. Yeah, that's what I tell, you know, my family sometimes says I work pretty hard. They're like, I can sleep when I'm dead. But I was like, no, don't say that. But you know, it's a thing. It's like when you're grinding, when you're in your grind mode, it's like a different type of hunger, you know? Like you want to show up. It's not about you working hard, is you want to show up. You want to work hard so you can get better. That's all I say. Like, if I can do something today, you know, if it's like a task that maybe takes me less than 5 minutes, I'll get it done. I'll get it done just so I don't have to think about it again later on. So, you know, it's a difference. I think what it is that I'm actually lazy, that I like to do things so I can be lazy later. You know, getting things done creates you freedom for bullshitting later, basically. And it also means that things don't stack up on each other. So let's say, you know, these small little tasks that we set ourselves on the day, like they actually stack up on each other. And sometimes it can get like quite overwhelming. So if you got like a to-do list, my goal is always to have that to-do list empty as I possibly can. So you know what that does? It's a little success trick. That means your brain has more capacity to get better. You know, since there's nothing on the to-do list, you're gonna have more capacity to think about different things. And you know, those different things sometimes makes the difference or rather gives you the edge that you might need in whatever it is that you're doing. You know, if you're running a business, having more capacity to think, it's actually a really good thing. So you can improve a lot. Stress comes from not doing anything. You know, you feel stress about trading. It comes from not putting in the work, stress. But if you have a trading day today and you journal your trades, you really put in your all, you try to remain disciplined, you say, okay, you know, I have this plan for myself, 3 hours a day, at least I've done something. Then at the end of the day, you're gonna not feel so much FOMO, you know, but you have to set yourself rules. If you don't have yourself rules, then you're comparing yourself all the time to somebody else. And that's a 24/7 thing, you know, there's always somebody taking a trade. There's always somebody making money. The market is always doing something. So you can't live 24/7 trading. You know what happens when you leave 24/7 trading? You're going to be at work on your phone. You're going to be watching a movie on your phone. You're going to feel like you're missing out all the time. And eventually that's going to lead you to burning out. Then just focusing on, you know, 3 hours a day, 4 hours a day, however much time that you have, and then sticking to that system. Like for me, man, to be honest with you, I didn't know what the hell the market did until I came onto stream today. So from my last trade yesterday up until now, man, the market could have been creating all-time highs and I would not even know. Because, you know, why do you need to know that? You're not trading. You're not in the market. I feel like you're speaking directly to me today. Well, I hope it helps. Because, you know, it's like something a lot of people, they're going to deal with. And it happened to me all the time as well, you know. And it's going to happen all the time to everybody who starts trading. Is being a slave to the markets. It's good to put in your 10,000 hours that, you know, they say that you need to become an expert at anything. Like, definitely put them in. But have some balance. that the market is not fully in control of your day. You know, have some sort of balance to say that I decide or dictate when I'm going to look at the charts. Is that the aftermath of a win I see on the charts? Right, you are, Joshua. It's consolidation breaks. So what we're gonna do is we're going to focus on consolidation breaks also for the London. We're gonna focus on, man, London is a completely different, it's become a completely different beast of late. You really have to be careful with maneuvering the London of late. So we're gonna focus on consolidation and direction. Consolidation and direction. Do you trade any other pair or stocks? Yeah, I trade GJ, but GJ is not moving here, you know, like, all right, GJ is moving finally now. You see, it's corrected this range. So we finally broke below 198.432 and it's filled this range here. Look at this. That's 16 pip range. Let's fill the range. So we're gonna trade. We trade GJ, but if GJ is giving us setups, but GJ has been moving quite nicely lately. I think it's still gearing up to break above 200. It's a huge consolidation here. But to be honest with you, if you can just trade even one instrument and master that instrument inside and outside, that's all you need. That's all you need to become profitable. You know, why trade more pairs when, for example, gold gives me a setup every hour? I can get a setup, you know. There's even a sell over here. There's a potential sell over here about to play. So why do you need to trade anything else? And you know, gold has the most volume. Like, gold is the best pair to trade. A lot of people love gold. We all love gold. Trump loves gold. Powell loves gold. You know, everything. Everybody loves gold. But something like GJ, USD, JPY, GBP, AUD, you know, those are like acquired tastes. NZD, USD, Euro, JPY, America. Yeah, gold is America of these currencies here. Because, you know, anything that moves like in mainstream news is gonna move gold. And mainstream news well is here, like what's happening in America, you know. When it comes to markets, stock market. I mean, America is in the forefront of a lot of things. You know, they have Wall Street. You got Wall Street, they're leading AI. You got Silicon Valley. So definitely, like, they do have quite an influence. The dollar. Actually, let's see what the dollar is doing over here. Probably get dollar strength. Oh no, dollar's weak. Dollar's weak and gold is weak. Okay, so GJ is saying that it's bearish and GJ is down 0.30% and gold is also down, and correlation is not working here for dollar and gold because they're both weak. And we already saw like 0.50%. Gold is here at 0.40%. So it's still bearish. I think it's all that it's done right here. It's had a retracement upwards, and maybe it can have its continuation now to the downside. So looking on the 5-minute time frame, it could be like a little break and retest of this, of this zone. This little accumulation, break below, come back in, and then potentially to keep heading downwards, break below these lows, little accumulation breakout over there as well. I think that would be a good idea for gold. Bearish continuation. Because, you know, gold has not proven yet to you that it's going to move upwards. You know, generally speaking, it's still moving down here. I made sell calls on DJ both Tuesday and Wednesday, but never got the entry. As I was on higher time frame, market owes me nothing. Just keep showing up. Looking for reactions from either 20 or 75 now. Yeah. If you're on the higher time frame, you do end up missing moves. Because, you know, they can trigger you in when you're not looking at the chart. See a little breakout situation happening currently. I would say it makes more sense still for price to move down here, but yeah, I would say it looks nice if price was to move down. Breaks these lows properly with some volume and then continues to push towards 33.69. We trade pairs of socks. Do you trade any other pair of stocks? Yeah, I think let's see what the Discord is saying here. So not too many chart work, not a lot of chart work here. Hey Waleed, welcome. Getting some news coming. Oh, it's a it's a UK services PMI. Actual 5.2. Let's say GJ should be moving right now. Let's see, where's the volatility? No volatility. Gold is moving down. Nice. Gold is moving down here. Heading down towards support. GJ is not doing anything. And we just had news come out. Let's see what the numbers were. Looks like we got a... Oh yeah, the numbers came in as neutral. We got some good numbers. I'm neutral and kind of bearish over here. I guess that, yeah, that was not enough to... Seems like possibly that was not enough to move market. Came out neutral. What's my take on GJ? GJ right now is just moving sideways. So I would say GJ has a range to fill towards 198.600. So this is about like, you know, 21 pip range. So I think GJ can fill that range. The daily time frame is however bearish. So we got 0.30% on the day. Overall stuck in a consolidation over here on the high on the HTF. So you got like a support zone, you got resistance up here by these zones. So man, look at this. If we're on the daily consolidating and we just tap below demand zone, then you know what's the probability that price reacts off this level? You know, that's what you gotta ask yourself. But I think if GJ creates some structure, it has some legs, some room here that it can continue to move up a bit more. GU moves better than GJ, honestly. Yes, GU has a lot more volume. Let's see. Gbpjpy USD. Gbpjpy USD. It does move better. Hey, what's up, D. Lewis? I think I haven't been here for a while. How you doing? Doing pretty good, sir. Where have you been? How's life? How's life? You working? You grinding, working towards your goals? What you been up to? Take a little break from trading? See where the count is. 1,514. Oh, you taking a break? Small breakup with the charts. Why are stocks up? Nobody knows. Wall Street Journal. Why are stock ups? Nobody knows. But someone's got to know. People move the market. Market doesn't move itself. Someone's got to know why it's up. Meme stock. Let's see who's really here. Pump and dump. You know, the probability of people... There's a higher probability of people passing... thanks for the sub. Edilan Cataline. Cataline, thank you for the sub. Yeah, man. There's a higher probability of people passing funded challenges than getting rich off meme stocks. I think the statistics on meme stocks was like 0 point something % of people actually make money off meme stocks. And on funding challenges, you know, it's higher than that. It's not that much higher, but, you know, it's higher than that. Got stuck in... It's basically the same stat as a profitable trader. You know, profitable traders, it's the same statistic for funded traders. Because only profitable traders actually can pass and maintain a funded account. So it's basically the same stat. Got stuck in a convo with some wealthy people, and a guy asked me how my investments were doing. Told him both avocados should be ripe by tomorrow. Yeah, but man, meme coins, you know, only if you're part of that small circle of people who are doing the pump and dump, then you can make some good money there. It's not that difficult to open up a meme coin either. I think I saw a video of a... Oh, look at this pattern here. I think I saw a video of... I think it was like a 14-year-old opened a meme coin and then he pumped and dumped it. You know, that's what meme coins are. So if you're gonna think that meme coin is a way to get rich fast, then, you know, you have to think... You have to be very careful about that. Let's see. Throw life savings into open. No, you can't risk it all on a meme stock. Woo and chill. Throw life savings into open. What is this? What is this? Why is Squidward looking out the window? UNH longs. Rest of the market. Only way to get rich on meme coin is to be the one pulling the rug. Got Kramer over here. A new place to... Does this guy actually make anybody money? Jim Cramer? Mad money. He kind of seems like he's all over the place, this guy. I can't listen to it, man. He sounds too... It's too loud. It's too loud and fast. I say, Gary has brought you hope. You got this hanging there. It's a GameStop. Oh, we got Roaring Kitty over here. As I see you doing great months here, do you have negative months? No. I don't have negative months. Thank God. I don't have negative months. To be honest with you, I don't have negative months. Only maybe if I don't trade as much, I can have a negative month. For me, a negative month is maybe like I mean like 10%. Like 10% is a negative month. Because, you know, the way that I focus my trading is on the foundation of how markets move. Correct? So it's not necessarily to do so... Okay, you got a strategy, you have a mechanical plan, but you still need to read price action. You still need to be adaptive to markets. You know, the reason people have negative months is because they're not adaptive to markets. Correct? They're not adapting to markets. So they're going to keep banging their head on something that doesn't work. And it could be the same for me if I didn't make any changes. You know, sometimes I see that my account is bleeding, and let's say I get like 3 losses in a row, then I'm going to look at that and I'm quickly gonna stop the bleeding. You know, people who have negative months, they focus too much on a rigid system. Sometimes the market is not perfect. Like sometimes you are going to have to bend your rules a bit. Like if I was gonna be very rigid about my rules, then I would be missing so many trades. You know, if I'm saying, oh, I want a 16 pip stop loss, or I want my stop loss in this area, then I'm going to miss a lot of trades. It's all about adapting in the market. That's all. You can see all my trades over here. I always pause before pictures, after pictures, the signal. So all these trades that I take here, you can look for yourself. You can see for yourself the before and after pics. Been holding my trades quite a lot recently as well because there's so much volume. I've just been holding them. Alright, so gold is still on its way down. Awesome. Actually, I never even take a trade anymore that I don't call out. You know, like sometimes I see a move, but my setup is not ready, so I miss those moves. But it's good to have like some sort of a evidence of the trade's been taken. And now I've even pushed it up a notch by, you know, just if we got any naysayers, you know, we're always going to have naysayers. But anyway, you know, I just like to push myself here. So now we're doing videos. So when I take my signals here, I try at least get a video for you guys. So you can watch the video and you can see how I took the trade and, you know, what was the reasoning behind the trade. So whenever I can, I definitely make a video here as well. So, you know, I got before, after pictures, timestamps on the signals. Like you can look at all this stuff yourself, you know. If you don't believe that I don't have negative months, you can do that due diligence and you can see for yourself. But yeah, these videos of, I think these are like pre-NY. These are pre-NY trades. So I'm trading the pre-London session and then the pre-New York. At least I hope like 3 trades in a day. I think that should be good. If I can do 3 trades in a day. Maximum. They're about to audit you? Yes. Audit me. I want to be audited. Because you know what happens is if someone has something negative to say, there's always something positive for you to use. You know, if someone gives you compliments all the time, then it's not a good thing because, you know, what are you going to work on? But if somebody says like, hey, you know, I think this and this and this and that, then you can say, okay, all right, so let me see then how I can improve a little bit better, because if he's thinking it, then somebody else is thinking it. So your haters are always going to be your #1 supporters. Remember that. They're the ones who are going to help you, not the ones who are supporting you. They're the ones who give you that constructive criticism. But new tariffs at 15%, it's improvement from 30%. So it's good for business. The question is, why shouldn't it go up? Need a toilet like that for me to hold it longer. Yes. Yeah, you got to tattoo this on your forehead. Hold the trade. Hodl. Just hold it. Just do it. You need Shia LaBeouf to scream in your ear. Just do it. When you're thinking about closing your trade, you guys just hold. Just do it. All you gotta do is just do it. Just do it. That's why I think to myself when I'm lying on the couch and I gotta go to the gym. I'm just like, do you really want this? You know, do you really want this? Just do it. Just do it. You know, it's a lifestyle thing. Trading is a lifestyle thing. Being healthy like that is a lifestyle thing. So the easier that you can make that is when it becomes easier for it to become a lifestyle. But if it's not simple enough, then you're always gonna burn out. You're always never gonna be able to keep up and actually track progress on what you're trying to maintain. So you gotta structure your trading. Don't structure your personal life, your trading life around your personal life. Structure your personal life around trading. So that way you have less things to worry about, So when you're trading, you're not gonna get someone coming to the door and like disturb you, or maybe you gotta do errands when you're supposed to be trading, and your girlfriend saying, "Hey babe, let's go. We gotta go grocery shopping. We gotta go here and there." And you're like, "Babe, just give me a minute here. I'm waiting for my trade to play out." That's what you want to avoid as much as possible, because that's gonna create stress for you in your personal life and in your trading. So your trading is also gonna take a big hit for that. Yeah, so you gotta find a way that you can remain like in a way that you can do it for the next 10 years and not burn out, and say, okay, this is a system that I built for myself and I can maintain this. It's much better to have a maintenance than something that's too aggressive. I think a lot of people trying to get rich quick, they don't have that because it's too aggressive. One day they're gonna take a big risk. Maybe you're gonna take 3 losses. What happens if you take 3 losses in a row? If you're risking like 10% per trade, that's down negative 30% already. Because it is gonna happen. Eventually it is gonna happen. So you have to plan for the worst. You have to plan for your worst day, that you're stronger than your enemy on your worst day. So that's how easy that you need your life to be structured. Now on your worst day, you're doing way more than somebody else who is lazier than you. But at your own pace, at your own pace. Yeah, I should have closed earlier. Had a weak moment. I was at a 1 to 2 profit and I held waiting for 1 to 3 that ended up losing. Man, you watched the video from yesterday, yeah? So the video from yesterday, here's the thing. If I was focusing on the risk to reward, you see, I think you were kind of focusing more on the risk to reward. If I was focusing on the risk to reward, my trade here, I was expecting a bomber clot from it. It was somewhat of a bomber clot. But at the same time, I said to myself, let me not be greedy, so I took a buy. I can't remember where my stop was. I think my stop was somewhere around here. And then I secured right over here, I believe. So risk to reward wise, all right, let me get the actual. Let's actually see what I closed. Stop loss. Oh, but yeah, it's risk to reward wise, I guess. Damn, that's kind of crazy to think about it though. Because if I'm risking 1%, if we don't think about risk to reward in terms of this thing right here, then that would have been like a 1 to 6. Yeah, that would have been a 1 to 6. If we don't think about this thing here, because I base my trading off percentages. So that would have been a 1 to 6, but definitely that was not a 1 to 6. I think that was more of like a somewhere like maybe a 1 to 2-ish. 1 to 2-ish. So it kind of helps you from being greedy. If you're just looking at terms from like percentages. Just see what's going on here. Nice. So getting that bearish continuation on gold. Bearish continuation. Trend is still downwards. We got 100 likes. Thanks for the likes, guys. Appreciate it. Yeah, let's see. I'm definitely overtrading, taken 5 today already, but I feel opening real positions help me learn. With the US news today, would you say that is it for the day, or are you happy to go into pre-New York? I would say that what would be a good thing to do? Maybe not to trade pre-NY. I would say maybe not to trade pre-NY. I mean, I could trade pre-NY even with the news. So your concern here is about the US news today. I would still trade pre-NY because, you know, like, when has news ever stopped us from trading pre-New York? You know, because we're always going to have, like, in a month, you're always going to have some days, well, there's going to be quite a few days where you're going to have red folders. And those are the days that you're having, like, winning trades. You know, but if we're trading before the news, then I think, you know, it's fine. We can still do it. I'll be happy to go into pre-New York. Yeah, this shouldn't mean too much here. Even if Powell was speaking, you know, because that gives us like a really nice opportunity, such as like when Powell was speaking all the way back here. So we use like a catalyst that says that, you know, price can even move really, really nicely for you. So it's quite crazy because I think Powell was speaking, I'm not too sure. I think maybe it was like 8:30. He's speaking at 8:30. But that's a beautiful catalyst for volume. Because, you know, most people are going to come in like later, but the market's already going to start moving. They're going to wait for the news and then the news comes out, but the market's already in motion sometimes. But with unemployment claims, let's just see what we can use here as a catalyst. So we're expecting an increase from 221 to 227. So we're actually expecting negative numbers, but we've had a streak of positive numbers come out though. You know, previous news was all positive. So we're expecting a good forecast here. A bad forecast, sorry, an increase. So that means that a dollar should go down and gold should move up. Yeah, I think so. I think that's what it is. But, you know, we're going to see how the numbers come out. They could come out neutral, or we could come out even less than forecast, which is still above previous, but still bad because it's an increase. But it's good because it's at below forecast. So you see, this is where it gets like a bit muddy. There's a lot of muddy waters when it comes to these type of fundamentals, like especially like the one we have today. So for me, I don't really have too much of a bias regarding this. I think this is for me just going to be a neutral bias. We got Freaky Friday as well tomorrow. Yeah, exactly. We also have Freaky Friday tomorrow. And next week is going to be the last week before the next FOMC meeting. But they're going to keep the rates the same. Now, the thing with gold is most likely heading back into this consolidation area that we recently broke above. So we might be coming and holding for a bit longer. You know, I really hope we don't have to deal with any sort of like ranging next week, and that, you know, price can continue moving like it's been moving. Man, when gold moves, it moves so nice. Look at this. This is Monday, Tuesday, Wednesday, Thursday. We're getting volume here on Thursday. It's been a really good week, I would say. And it's still got a like a little swing entry model over here playing out. Hit support, going towards the next level here. So that was a retracement, little break and retest of this zone. And you see, look at how, you know, we always talk about this, guys. So if you've been following this stream for a long time now, what is this? What is this? We mentioned again how the market will find these areas. This is where majority people get the confirmations. And that's what the market loves to do. It will come spike into that level for a bit and then take them out before you have your continuation. So you know, like how predictable markets can become when you have a mechanical plan, because you can actually remove so much of the randomness and see how price behaves. So you see, we got that again. And you see, this is a recurring theme. This is always going to happen over and over and over again. So if you find yourself that you're losing a lot, just know that that losing is going to happen over and over and over again until you can find yourself a way that you can at least win more than you lose. Correct? So that's kind of like the sweet spot that we like, where you kind of like winning more than you're losing. You know, ideally, whether that means a high hit rate or whether that means managing your risk, that even on a one-to-one trade, risking 1%, you can lose maybe 0.50%. You know, however you want to do it. Always remember the market is dynamic. There's no one way to trade. You know, one way to trade is basically the vanilla way of looking at markets. You know, very vanilla, risk to reward, hit rate, that sort of thing. It's for people who are lazy that they want those shortcuts. You know, they'll want it to be that easy, but it's not that easy. The market is a very dynamic thing. You know, if you're not good at adapting and seeing different ways to you know, take your positions, then how are you going to survive in an environment which is changing, you know, all the time? A good place to start is a good foundation. At least you got a strong foundation. At least you understand some of these things. Then you don't play the victim anymore. So when something happens, and let's say you get into like a 4 losing streak, you can say, okay, so I understand that the market is dynamic. Let me look at this and see what has changed from maybe last week. Why was I winning so much? Then you're going to say, oh, so last week we were trending. Price on gold was moving up. Now this week market is consolidating. So you're going to think to yourself, all right, so there's something I can learn from this. You know, maybe when market consolidates, now I can also be dynamic and sort of like allow myself a possibility to change something a little bit, you know, make myself some flexible, and then wait for market conditions to trend again. And then I can go back to what I was doing when I was winning. So you're trying to learn how to survive in the trenches. What it is that you're trying to do is survive drawdown times. That's what we call the trenches. Because most of the time, I feel like if you can successfully survive the trenches, you keep the profits that you make. You know, a lot of the time people can make like very good profits and then they'll give them back before the month ends. Or like they give the profits back towards the end of the month. So if you learn how to survive the trenches, one of the most important things is because when the market wants to take your profits, it's going to take your profits. Right? It's going to say, okay, you know, I gave Bosco here a really good run. So now as we're ending off the month here, I think now I'm going to test Bosco to see if he can actually keep his money. You know, the hardest thing is keeping your money. Making money is consistency. Keeping money is discipline. And multiplying money is wisdom. Pull back 80 pips. TP 80 plus 80. Yeah, so, you know, I think that's what it is. I think that's what it is when it comes to thinking about trading for the long term. Hey, Patrick, thank you for the sub. So, pretty nice move here on gold. It's still moving down. So, you know, I think so far it's been bearish. Makes sense. We have not yet seen anything from the market to tell us otherwise. Majority bearish. Oh, nice little resistance being formed here. Beautiful range. This is about, like, you know, 50 pips. 50 pips if it was to buy up. Break above resistance by 33.68. Continue moving up there. See chat. Cool you, bro. Okay, nice. Hey, Mr. Rashid. Good morning, good morning. Any console plays? 1 minute. Yeah, that beautiful console play here. It was like a console X swing entry model for those cells, re-entries. You kind of also never miss a move, right? So if you think about it that way too, because you know a lot of the time, like people are gonna miss a move like that and think that they're missing moves on the market. But look at that, you never really miss a move. Came back to retest his highs, and then it also gave another setup here for a re-entry to sell off. There's like once you shift that mindset towards thinking of markets as an abundant mindset, then you stop doing all the rushing. You know, you stop rushing the process. You stop feeling FOMO and you feeling like you're missing moves. Theoretically, if you missed this first move, let's say you came into stream late, you could have caught the second move with TFX concepts here. We actually even spoke about this as this was forming. Little consolidation break over here. But if you don't build courage to execute based on your own ideas, then you can never become a trader. You know, most traders who rely on experts, it's like when you rely on somebody else's advice all the time, you're never gonna excel at that. You're never gonna build a skill. Correct? You have to be able to build that confidence. Anyway, let's see. Hourly time frame, little pull up. Yeah, it's a little retest. Hourly highs to continue moving down. Break of the hourly lows. Let's look at this on the 4 hour. You got 4 hour support. Nice little range here. That's about 117 pips 4 hour. If you can get through a, was that 33.66, price will tumble down. I made my target for today. I've seen that staying on the stream on the charts after I made profits gives me heavy FOMO. I end up giving back the profits and losing on the day. If that helps you to get off the charts, then by all means. But at the same time, you have to also look into that a bit more. You know, what you're doing is you're covering up a problem with a... So that's not really a solution. So you have a problem that you can't control yourself. You know, that's the problem. So that's what you got to work on. You know, hiding it is not a solution. You know, people who use these apps to like put the MT5 away or close off the charts because they're taking too many trades. Man, that is not a solution. You have to be able to control your mind. Like, how can you not be able to control your mind? You know, that's a question you got to ask yourself. Like, why can I not take a trade? Why do I need to take a trade? Who's in control here? Are you really in control? You know, because that means there's something else in your life that's taking a hit. It's not just your trading that's taking a hit. You're having lack of commitment somewhere else as well. You know, you can sit on the charts here for like 3 hours and not take a trade. And man, that, let me tell you, that gives you control over, or it gives you confidence. Give you confidence. And heck, you know, you're not the one streaming, so you don't have to take a trade. 100 push-ups to every rule break? Yes. If you got a pull-up bar, like 10 pull-ups for every rule break. Or you do a whole set. Vic, you should try funding and trade large accounts. But when does that ever end? Because even if I was making, let's say, $50,000, people would still think that you can get more funding for 100,000. Once you start making 100, 500. Once you start making 500, 1 million. It never ends. It never freaking ends. That's why you just like when you're paying your bills comfortably and you're living a comfortable life, that's pretty nice. You can be humble about that. And then the gains are gonna gradually come. Like over a span of, let's say, 10 years, obviously my gains are also going to increase. I think like things just take time. Things just take time. There's no need to feel like you're rushing anything. The markets are not going anywhere. They're always gonna be here. I think as long as, we're using furlough, then the market is always going to exist for the next, like, however long we're going to be on this earth, then it's going to exist. And we should always be able to have access into it because retail traders, we contribute a good amount into the market. So I don't think it's going anywhere. I think what happened was there was a scare in like 2021, 2022, I think, that we would not be able to trade. But I think that's when the regulations came in and people from the US and certain countries weren't able to trade the markets. But you see, there's always a workaround. And you can find ways to do things. I trade normal size, then if I win or lose, I drop size right down to 1 micro and satisfy my trade hunger. Nice. At least you're managing your risk. Like one of my mentors, he also just makes like around, usually on average, I think maybe like, $5,000 a trade. Something like that. And then every now and then he has like a big trade, maybe like, $15,000, $20,000. I think that's the sweet spot. Usually the trading sweet spot is anywhere between that range of like 1K per day to like 10K per day. And then, every now and then, Trump says something or some war comes into play and then you can maximize your gains, maybe like make 20K. The people who do high risk, let's say they're making like $90,000 a trade, 50K a trade. I feel those people, usually you're going to see that they take less trades. Correct? But like if you're day trading, a good spot for mentality is even no matter how much money you have, $1,000 is still a lot of money. Don't get desensitized by all this crazy lifestyle videos that you guys sometimes watch on YouTube. This insane, absurd, the guy walks into a shop, spends like $300K on a watch. Like don't get it twisted. $1,000, man, that can go a long way. Also depending on where you live. You make 1K a day, man, that can go a long way. So that's a sweet spot right here, 1K to 10K, and then the occasional, like you get the occasional pump. I think it's pretty nice. Because, then you're patient. You're patient for these occasional pumps. Because, you're going to know when they're happening. That's like when Powell is talking, interest rates come into play. Then, you have like these higher probability trades that you take a risk on. Or like just hold the trade longer. You may not even need to increase your risk. Because if you increase your risk, that's the dangerous part. Because if you take a loss, you're going to have to revenge trade. So if you take a sell and you lose, let's say 20K, and price goes up, and then you have to look at it correcting that move, then you take another sell, you're gonna have to like revenge trade to make that money back with profits. So that's the dangerous part. I would say when it comes to making more, at least find yourself like with a low risk, high reward instead of like necessarily increasing the risk. That's what I did for my trade over here. I made 6% and I didn't increase my risk. I kept the risk the same. I just held the trade longer. And man, if I held the previous 2 trades, those trades ran for like a 1 to 20, 1 to 30 risk to reward. And those were in line with the macro fundamental space. So you can already start to see the possibilities of scaling. It's a beautiful thing. It's a beautiful thing to really compound accounts like that, rather than taking big risks all the time. But trading at the end of the day as well, this is earned income. So I get the idea as well to trade more and more and more. But remember what the goal is, chat. The goal is passive income. We want passive income, not earned income. We don't want to become a slave to the markets forever, you know. You want to be able to take this money and go actually get some real assets and start building like some kind of life for yourself. Because you know, this you got to work. You got to show up onto the charts and you got to do analysis and you got to take your trades. But it's so much nicer getting passive income. Literally making money. If you really want to get rich, it's in passive income. You know, Elon Musk, Jeff Bezos, all these super rich guys, it's all passive income. They can be on a yacht somewhere, chilling on a yacht and not have to, you know, sit in front of a chart like this. They can just be making money. That is the goal. That is the goal. You can make a good living from just trading. Don't get me wrong. But I want to make this money without working hard. Dun, dun. Man, this view counter here, it's still not working. Why is this counter not working? Why is this counter not working? Dun, dun, dun. Anyway, it's okay. Watch when I make big capital, my YouTube name will change to Mr. Passive. Or open up let's see, do we got any charts in here? No charts. Oh, nice hard day. Scary dip here. But this is good. This is really nice. Look at this. You got a dip and then you slowly started recovering better. Look at your graph. Very nice. This is an awesome equity curve. Scary dip though here. Yeah, that's ideal. That would be an ideal equity curve. The craziest thing would be to have like something so consistent like this and then have something like this happen. Well, that's the worst because all you need is a bit of bad luck. A bit of bad luck to do this again. Get one more bad trade to really bring the account down negative. Looks like we haven't had too many trades since then. Vic, can you show us your progress of the account on IC markets? No, I don't need to. I've been in this industry long enough to know that doesn't help anything. I've seen people show my FX book, show history, show all of this stuff, and they're still asking for more. Next, you're going to be asking for my bank statements. Next, that's what you're going to be asking for. So I'm not playing this game. You know, if you find value here and you know something can help you on the stream, then perfect. If not, then you know it is what it is. It is what it is. Next, you're going to be asking for my blood type, my spouse's name, all of these things. Why is gold so bearish since yesterday? Yeah, gold is having a retracement because, you know, price has previously moved upwards. This was all due to some short-term, this was short-term, what do you call it? Short-term macro news between Powell and Trump. So now that's getting corrected. So it's a technical thing. I think what gold is doing, why it's coming down, is because it's still ranging overall. You got resistance by, 34.40, and then you got support area down over here. So we're waiting for interest rates before we actually start moving up, it seems. Because everything that's been happening of late is like stimulation, just small stimulation into the market. But nothing really has changed. And we still got the August 1st tariffs that still need to come into play. This is going to be next week, a Friday. Then we're going to get the NFP, the non-farm payrolls. And then, we're going to get, again, stimulation into the market. Then I think price maybe can move up here on gold again. So right now, it could also just be pricing in PA for next week. So we're coming down like this for August 1st. Where August 1st, we're going to have price move up again. Then it's going to be a really nice range. So mark my words, this is what I'm anticipating. That this is just a beautiful range that's been formed for next week's PA for a potential correction. Then, price can come back up here and retest the highs. No track record equals no profitability. Bye-bye for me. Catch you later, paper. Adios. Take care. I hope you can find yourself a good guru who will show you that track record. And then you'll say, oh, this guy has a Lamborghini. Oh, he's showing me a track record. Oh man, this is the guy. Not the guy doing it live and showing the signal every day and showing all the trades. Go follow the guy who doesn't trade with you, who will show you his awesome car and then show you a track record on a broker that he's affiliated with. Yeah, very smart, man. Very smart. I wish you the best of luck. I wish you the best of luck, sir. Yeah, but anyway, since then we haven't had anything happen. Gold is just trickling to the downside. And until we start to get structure, I would say until we start to break above resistance here, then there's no reason that price should be moving up yet. It's going to be a very risky trade. Price comes down like this. If you take your first buy like this, that's going to be a very risky trade. Because you're going to be getting the inception of a potential buy. That's going to be the first buy. But I would say, like, if we start approaching something like this for pre-New York, then price can, close above this area like this. And then continue to move up. That's what I would be expecting. Although Vic didn't take the sell, he definitely called it from a while ago. Oh yeah, this was the sell because I already took my sell here. So I'm not gonna I don't feel like I need to take another trade. But there was the sell here we did call out. Beautiful little sell. Continuation right here. In line with the mechanical plan too. So I think, that's pretty nice. Hey, thanks for the sub, Jake. Appreciate it. Yeah, you have to be careful, man. I've seen it. I know this game. The thing that paper guy is looking for, he's looking for an affiliated guy with a funding program who can show him those weekly results. That platform which shows like green, red. That's what he's looking for. And like a dumbass, he's gonna go and fall for that shit, not knowing that this guy is making millions of dollars in referral a month. And obviously those companies, they have like it's a conflict of interest. So it's just like a marketing thing, but that's what he wants. But we don't do that here.
We don't do that here.
If you look at my description, I even have 0 affiliations. I'm not affiliated with anybody because, I don't like the idea of leading people into something without any sort of a education, Because most people who do funded challenges are the people who are not able to pass funded challenges, unfortunately. And that's the whole idea. If more people pass funding challenges, then we wouldn't be having funding challenges. Why would someone give people money if most people are passing them? It's like, it doesn't make sense because, the money comes from the funding challenges. It doesn't come from the market. It comes from the companies. And if you get too many people passing them, then you can't give payouts. Then you can't give a payout. See, 1 minute. Little V shape. Let's see what GJ is doing. Oh, GJ created resistance. GJ has some room to move up if it can break above resistance here by 198,582. Let's see, we have resistance. It's about, 12.7 pips. 12.7 pips up towards 198,800. Had a little pullback into the range, a little accumulation over here. It pulled back into the range, and now it's trying to re-break out of this range to target these highs. Okay, yeah, I think that's what I would say makes sense for GJ, especially since it's bouncing off. It should be bouncing off an accumulation on the HTF too. So it's a similar idea. If you think about it this way, entries would have been much nicer down here if there was an entry confirmation. But actually no, it's kind of choppy. It's kind of choppy, but it recently just tapped at the bottom of the range over here, so it can come back and retest these highs potentially on the HTF. So it's the same idea. Also, like if you look at the trade from yesterday, when I took my buy, it was also a similar situation like this. We're moving sideways, and then I was getting my entry confirmations from down here for price to continue to move up. Did you manage to get the 100? Let's see, done for the month. Oh, nice. You got exactly what you needed. Very nice. Damn, Ricardo, you've been killing markets. Yeah, I think, man, the worst thing you can do is, even this topic about money, it's a very sensitive topic. Money is a very sensitive topic. So, Paper, I don't know in what world that it is that you live in, that where you can just go around asking people about their financial situations. I don't think in the real world that you can go and ask someone such sensitive, money is a very sensitive thing. You don't just talk about money to people you don't know, You can only talk about money to people who you know. Like when somebody trusts you enough, then they can start slowly disclosing things for you. Just generally speaking. Correct? Like have a little bit of but I think what it is, it's good for transparency, and there's a way that we can do things that I can be transparent but not make myself vulnerable. I've had mentors who've been robbed. I've had mentors who've been making a lot of money, sharing everything. Guys getting robbed. I've seen people stories getting held at gunpoint, even as recently as just towards the end of last year. You know, so you know, just use your brain a bit. You still think this is a game, man? Trading is not a game, bro. Trading is not a game. It's a business. You know, this is a business. Know the difference. Where's gold heading towards then? We're starting to break below support. We got like support here by 33.64. Beautiful range here. Look at this. This range got about 116 pips. Man, I think gold wants to move down for the rest of the day, you know? That's what I've been thinking, because like yesterday, since we already had so much bullish momentum, people are most likely still thinking that price can go up. But it's usually days like this which catch you off guard when you think that we can still get this bullish momentum, and then you see that price is still flowing in a opposite direction over here. It's a perfect scenario, man. This is something that, you know, the more times that you trade gold, you start to have or anticipate certain days like this. Because what happens is, if something happens once, okay, you missed it once. If it happens second time, okay, you missed second time. Now you're thinking third time is the one. I'm seeing this is playing out so many times. You get third time, or you might get the third time, but it's not going to be as good as the first two times. Correct? But then when you're coming into the fourth time, that's kind of like now the market is going to be kind of shifting. It usually happens like this because people catch on a bit late because of how fast the market moves. It can move one push here and one push here, and then people catch on a bit too late and they still try and catch the continuation. Then it does the opposite. Then they wonder like why when you buy it goes down, and when it goes down that it goes up. Because you see, like right now we got the pretty much one of the inception moves towards the downside, and I think even for Freaky Friday, depending on how this candlestick here closes, we might very well just see Freaky Friday again also just continue pushing down like this. So it's just something you gotta pay attention to. Like if we see in the London session, we're already down again, like 0.30 plus, you know, 35%. Then there's a probability that, damn, you know, price can go down. Price can just keep going down. So always look at that daily time frame as a compass. It's a really nice compass. Not only the daily time frame, but look, if you got your kill zones here, look at this. Look at your kill zones. Kill zones telling you yesterday, massive dumps. You see massive dumps coming into the market. So you have to be cautious. This is kind of like, you know, warning to tell you that, hey man, you gotta be cautious. You gotta be cautious about the buys, because we could just keep moving down over there. Because, you know, you can show this to a 5-year-old and a 5-year-old will tell you that, you know, price is moving down if you just show him the line graph. But if you teach the 5-year-old FVG, order block, you know, book map and all of these things, now the 5-year-old will tell you that there's an liquidity grab here, potentially book map, pivot point, etc., and price should be moving up. You see then you start building this sort of a bias in the market, because, you know, you're learning a lot. So you think you're going to outsmart the market now. But that's why, you know, when you keep it simple and say, okay, you know, price is moving down, so maybe there's a better probability for price to continue moving down, then you get those results. Problem is in trading, people they love to outsmart the market. So you'll see something like this and try and catch the bottom. But there's only one bottom. And the possibility you're going to catch the bottom, you know, like what's the probability that you're going to catch the bottom? Look at this bottom here, bottom here, bottom here, bottom here, and it's still creating new lower lows as we speak. See? So I think sometimes just keeping it simple actually works beautifully. It's that basically I like to say that casino analogy. When you go casino the first time, you're always making money, right? Most of the time you're trading. When you first start trading, you make money because you're keeping it somehow like super simple. Then you start learning more and you start losing money. But it's good to learn more and lose, because you need to at least get that education. You have to get the character development. Because, you know, if you start off winning, there's no character development in winning. You know, if you become successful overnight, you don't have the character to maintain that success. As opposed to somebody who really got it out of the mud. You know, when you get things out of the mud, you have a character development on another level. You know, so you've been in the trenches, you understand how the game works. So, you know, you're going to have someone like Justin Bieber get picked off the sidewalk by Scooter Braun, get him into a contract, and then take advantage of this little kid's talent. So when he gets into, you know, his late 20s, you know, he's going to be used up by the industry. The industry is going to use him. Then you have someone like Jay-Z, or you have someone like Kanye West. They're getting it out of the mud. They're building the character. So they know that when I get to this level, nobody's going to manipulate me, because, you know, I see how the game works. So it's just same way as in trading. You want that character development. Without it, then you cannot make the right moves. You might think you're making the right moves, but if you don't have somebody else to kind of guide you sometimes, you can easily kind of like lie to yourself, correct? You can lie to yourself. So what happens, for example, is let's say you have 1 month profitable, but you don't know you need more data than that for a trader to really build confidence in their system long term. Then you're going to lie to yourself that you're already profitable trader. So someone's going to ask you, you're profitable? You're going to say yes, but maybe you just had 1 month profitable. You know, what about the next month and the next month and next month? And you know, the problem is 1 month profitable, next month can be a losing month, but you're still going to lie to yourself because of that 1 month that you are profitable. So you're going to have one losing month and you're like, damn, you know, maybe then you're going to have a little bit of luck here and there. But the truth is you just haven't built the consistency yet. You're still in the process of building your character. That's a kind of emotional roller coaster a lot of people go through when it comes to like getting funded. Because, you know, sometimes they like almost pass a challenge, they fail the challenge. Some people pass it for some time, don't really make the payout, and then they're back to square one. So it's like you're still in the process of character development. So you have to be honest with yourself. And, you know, you're going to save a lot of money. Hey, Dajit, thank you for the sub. Appreciate it. You got to save so much money. But it says like, this is like the hard truth that we don't want to hear. Correct? Because, you know, the thing is, when we want something, we want it now. Correct? When we want it, we want it. The same thing like when we want to buy, like, you know, the latest Sony headphones. The latest Sony headphones are coming for like $500, let's say. But you know, if you waited a little bit longer, you can maybe get them for, let's say, even like $350. But, you know, we don't want to wait. We want it right now. So what happens is you always going to pay more. You're always going to pay more when you want something really bad. Just the same way, let's say you're haggling for something. You're on holiday, right? Because we just have vacations. And you want to get something. And someone tells you it costs you like, you know, $10. But deep down inside, you know, that thing costs like, you know, like $4. But, you know, because everybody has it, that you want it and you really want it, you're going to end up paying $10. You know, you're always going to pay a higher tuition fee the more that you want something. So you got to be careful. Make more than you spend and you'll be all right. Yes, you got to have a good habit. If you have a good habit of spending money, you have to have a good habit of making money. That's true. You got to make money. So if you got a good habit of spending money, you have to have a good habit of making money on the charts. Good discipline, good consistency. Then, you know, like you can do whatever it is that you want with your money. You can pay the high premium prices. You can do everything. But as long as you're not lying to yourself. Doing a little accumulation here. Ooh, starting to break again. Look at this. People are maybe going to be looking for a buy here and price is still moving down. Why did we... This is a 1 hour look at how clean this look from day to day. And look, I know exactly. Look at this. Very nice. This is beautiful. This is like art. This is like, you know, Picasso here. When we're looking at an instrument which has volume in it. So I think gold is doing pretty well. A lot of this is kind of like, you know, we're kind of tiptoeing over here on gold because it could be any time that the volume starts to die out a little bit again. But of late, it's been really nice. Look at these swings. So whenever you're picking an instrument, you're always looking for instruments which kind of like spaced out like this. So you want to trade pairs preferably like this because you have a higher probability of catching really nice trades. You see this market environment? Man, the reason I'm saying this is because like this is the environment that you need to be in when you're looking for like, you know, really good moves, really bomber clot trades. This is like a signal from the market to tell you that, you know, I'm moving pretty good here. So if you get a buy, you can get a really nice buy. If you get a sell, you can get a really nice sell. But then don't lie to yourself and say that GJ is looking good. You know, GG's looking good. You have these little swings. You think you can catch them. In hindsight, it looks like it. But when you're actually trading, you're most of the time caught in this choppiness here. This little sideways movement. You know, I think we're really easy to talk ourselves into trading because we just want to trade. Just the same way as we want those Sony headphones, we're going to justify the price. We're going to say 500 bucks. It's a new headphone. I'm going to justify to myself that it's a price worth paying. But, you know, deep down inside that, yeah, you know, deep down inside what it is that you're doing here. Deep down inside, you know, we want to take that extra trade. You know, deep down inside, you're already profitable for the day, but you're still going to take that trade. But, you know, what I'm saying here is you don't have to be perfect. You know, perfection does also not exist. It does not exist. But balance perfection with progress. You know, so if you see that you're having some kind of progress, then it gives you some sort of freedoms that, or rather insurance that you can make those moves. Like, for example, if I'm going to overtrade and I'm already up for the day, so I can just reduce my risk a little bit and then still keep my profits worst case scenario. Even though I know that I am over trading, I'm still doing it smart. I'm still doing it in a smart way. Well, we got a small little accumulation over here. I think it's just about to break out. It looks like it wants to break out somewhere. My favorite charts are Architects. So much info, but very clean. Yeah, Architects charts are pretty clean. Squeaky clean. Rubber ducky clean. Where are his charts here? We need the rubber ducky emoji on your next chart, Architect. Let's see, Absolute Cinema made 23%. Oh, nice. This is obviously gold. Obviously gold. Where are... You haven't posted a chart in a minute. Yeah, I haven't posted a chart here in a while. But you see, it's like, it's quite easy to follow. Correct? It's very easy to follow. Confluences, there's not a lot of analysis on the chart, so you can just see the zones. I think support and resistance is a universal language. This is like an alien language. You know, this is like an alien language here. So support and resistance, most of us can understand. Even if you like trade like this, you can still understand support or resistance, because that's what's like also really moving like structure. If you see it's moving sideways, then you have a resistance and you have a support, a key psychological mark. So you can see that it's moving sideways. Or yeah, that sort of thing. It's much easier to understand. This is like an alien language. That one is Predator's health reading. Yeah, that's a good one. I'm waiting for the new Predators movie should be coming out. I think sometime this year. Yeah, it does. You gotta hook up the Predator thing to one of those medical devices. That's how it's gonna look. Yeah, alright guys. But I think I'm gonna head out here. I hope you all enjoyed this little session. And take care everybody. Don't overtrade, don't be a degenerate, and I'll see you in the next one. Adios.